Steve, Andy, what's going on?
Oh, thank you, Scott. Hello. Happy New Year, Andy.
Yes. Hi, Steve. Happy New Year to you, and same goes to you, Scott, and everybody out there.
That's right. Everybody gets a Happy New Year. Thanks for tuning in. Like Scott said, it's the first. Okay, little British guys talking to me from IB. Writing the date out. This is the year you want to write out the whole 2020 because if you just write 20, somebody can backdate stuff on you. So life. Next week is our annual Trade Ideas annual meeting. It's the only time once a year where the entire company, all 25 or 6 of us, actually do get together in the same room for a day or two and try and strategize for the coming year. So what that means is Jamie's webinar on Monday, my webinar on next Tuesday, and also the next Wednesday webinar, I believe, may be canceled. So, glad to be here this week. Sorry we can't be around next week, but trust me, we're plotting and demising good stuff. All right, here we go. Trade of the week disclaimer, just a reminder that we are publishers. We're a software as a service subscription company, and Andy and myself are not licensed brokers. Anything we talk about really is just our own opinion. If you want to follow along, great, but we're not giving out financial advice here for sure about that. Again, it's a 15-year product, pretty much coming up on 15 years. A lot of layers to it. It's not something you can learn overnight. Most people, it takes them a good month, and then they go to the next month or the year if they'll want to lock in their promo rates, but it's not something that can be learned overnight. So we're here to try and help shorten that learning curve as much as possible. These are the afternoon webinars we're talking about. Yesterday, I helped Jamie. Today, myself. Wednesday with Dan and Brad, and Thursday again with Jamie and Andy. And then Friday we have a open for support. Come one, come all, basically, questions and answers. We call that our Friday tech support session, where you show up and you guys tell us what you want us to talk about and help you with scans or help you understand things. So that's available. And then, of course, the live trading room with Barry Anderson. I don't know how he does it. Andy and I used to do it many years ago. It's exhausting, quite honestly, but Barry is cut out for it. He's a saint in there, and he runs a pretty good ship, pretty informative ship, and most importantly, it's a free ship. A lot of companies out there are charging for what Barry is offering in the Trade Ideas environment, and in exchange, Barry really helps out by helping promote the product, and he sends people in there all the time for immediate demonstration. If it's slow, you can pop in there and do like you're doing in here, type a question, and he will demonstrate that for you. So a lot of ways in which to learn. We also have the TI University, which we're still doing live for the moment, but we're gearing up to record these with the newest features so we can move on and start, I'm talking about Brokerage Plus and paper trading and other things that we're going to need to talk about for educational purposes in 2020. So what I'm saying is these are still live for the moment, but at some point they're going to be evergreened. And we'll move on to some other live type of support in lieu of that. So lots of stuff to keep you guys, especially the new traders, the new users, I should say, up to speed on getting up to speed very quickly. We're here for you guys. And a phone call just doesn't do it. There's not much that can be done over a phone except waste yours and ours time. The place to do it is to come here and get visual demonstrations, whether it's in Barry's room or our webinars or the Friday support. All right, with all that said, entering a new decade here, all right? And the reminder is that the new decade is going to be full of the complement of man and machine working together. People that are not using the machine are one hand tied behind their back. People that are looking for the machine to do everything for them are delusional. But, if you're over 45 or 50, the old commercial, your peanut and my chocolate, we got a great marriage here, human and machine. Trade Ideas is the machine. It curates the ideas, and the human finds itself at the last decision process. The discretionary decisions are made off of really nice curated ideas, whether it's in medicine, oncologists, I can go on about that, or whether it's in finance, is what we're talking about here. The data, the large data sets are going to be simplified with technology, and we're here to work with them together, not rely on them solely, but help them show us what works, what's good, what's bad, what's a good idea. I shouldn't say what's good or what's bad. It's just, what do we like, what do we don't like. So that's the theme, and the theme will continue. Man and machine combined are your best bet. So what will we talk about today? We'll talk about a few things of normal formula, market recap, some interesting things going on right now. Andy will have some AI recap stuff, mostly from Neo, I think. The trade of the week, we have a lot to talk about this week. There's some interesting dynamics and some real world examples of how to maybe adjust your levels accordingly. It just kind of bled right into that. I know that's what the email teaser was, but we've got some great examples this week to talk about using GDX as an example. Technically, it did not trigger, but I think the trade is on, but we'll talk about that. We'll go through some scans. I don't have a list of ideas that I want to show you. I didn't have time, quite honestly. We're just going to sit down and go through some scans together, kind of like homework, and see if anything shows up. All right, and then if we find anything that we like, we will set some alerts. All right. All right, well, maybe maybe Andy can try and answer that question. It looks like a long one related to Brokerage Plus tab, and I don't really have the ability to demonstrate that today, but if not, Andy will point you in the right direction. There he goes. You will address that. Awesome. He's got something in mind. All right, so let's get started with first off, the market recap. Now, if you were in Jamie's webinar yesterday, Andy, you missed it. I drew a pretty good zombie coming at you. Wouldn't stop coming at you, because that's what this market is. This market is just a disgusting zombie that has no feeling or no thought. It just wants to keep coming at you and moving higher. That's nowhere as good as the zombie I drew yesterday. Okay. You can ask the other guys.
No, I will.
David, see that David knows. So the zombie market continues, but as I said yesterday, we got to pay attention to what the price action is telling us, not what the news is telling us. The news is telling us we've got World War III, and we still might, but the last 3 days, the market doesn't really seem to buy into that narrative, especially before today. You had gap down, trade up, gap down, big trade up yesterday. So we're sitting, and I think I found a really interesting line. It was basically, let's see, what was it in the S&P? Yeah, it was this line right here. Thank you. It's basically just a double confirmation. And what I pointed out yesterday was resistance, resistance, resistance became support, support, support. So there's our new pivot line. That's one level of interest that I'm looking for. So we'll keep that in mind. Now, if there's some stuff in the news happening, you'll see the buy tag. I mean, we can go into aftermarket, but the market's down a little bit. There's some more stuff happening over in the Middle East. But if the Monday or Friday's action isn't any indicator, if we gap down tomorrow at this pivot level here, chances are the buyers might just say thank you very much and show right back up again. We'll see, but the point is we can sit here and try and figure out what's going to happen in the geopolitical news that might drive the market, or we can just focus on what the price action and the footprints in the sand are telling us. And so far, matter of fact, I even think it's probably worth taking a look. So far, aftermarket, it has kind of shrugged off at least half of that. See, we dipped down to these lows down here. I'm looking at the aftermarket after closing up here. I'm sorry, closing here. And we're back at the midway point. So already buyers have kind of stepped in there, even though there's a long overnight session. Other picture, this could be just setting up for another one of those wedges that just seems to want to resolve higher, barring any giant black swan that does spook the market. So going over to the NASDAQ, I mentioned the NASDAQ led the year last year in 2019. It was the index that was up the most, and that would make sense when you've got Apple and Amazon and all that driving the tech. It was really the driver of new highs, and there's no reason to think it won't continue. Today, we had an interesting little small range doji. It could do one of two things. As a matter of fact, I'll go ahead and just say it. Tomorrow, I would key off of what's going to happen here. I don't know where we're going to gap, but the low of that doji, if we trade back below the low of that doji, be careful. If we take out the high of today's doji, there could be a follow through in what we call a go, pause, go, with today being the pause day. We'll just wait and see. Again, that green tag is showing us the price action is still within today's range, but down a little bit after market. But we'll see what happens overnight. More importantly, we'll see how the market opens up tomorrow. Moving averages, again, this is a perfect looking chart. Moving averages are all stacked nicely, and you've got the 10-period moving average kicking the price back into play every time it even attempts. So there's absolutely no bear case to be made. You can tell me about the Middle East. You can tell me what you think might happen. But I guarantee you were probably wrong if you thought you knew you were going to happen on Friday and on Monday's open, because the buyers showed up. So we will let the price action determine what we're going to do. Now, also mentioned yesterday, and we must mention, and I'm not happy about it, but this IWM needs to get into gear. I mean, we've talked about it over and over. It's had every opportunity to do so, and it doesn't look as good as the NASDAQ and the S&P. It's bungled up here in these moving averages where the others are bouncing and trampolining off the 10-period. I don't necessarily like that. I wish that these billion-dollar fund managers would, get their pencil sharpened and realize that this is where the alpha is going to be. If we're going to keep moving higher, this is a lagger. The small cap Russell 2000 has been lagging. And if the others keep going higher, it's just a matter of time before this thing gets dragged higher by people, and their human nature is going to want to look for an edge and look for an angle. And I think that's where the edge and the angle could be. And I've still adjusted my 401k accordingly. No reason to think we haven't had any change in the winds until I'm proven wrong. What else? Gold obviously is going to kind of segue into our trade of the week. And let's talk about price action. So, the stocks aren't really spooked about what's happening over in the Middle East, but the gold market kind of seems to be a little spooked about that. That's interesting to note. The oil market, not as dramatic. Interesting, the gold market really seems to be the most dramatic, and probably, coming out of this tight range that it had back here in November, December. Pretty good move. Now, would I be looking to buy gold, the commodity here? No, it's got a pretty darn good space between the moving average I like and that. You're just asking for that pocket of free fall, of vacuum space. You never know what's going to happen in there. But we'll touch a little bit more on the gold miners, which is the trade of the week. I'll pull that up, and I'll pretty much say that's all I've got really to talk about in terms of the market recap, unless Andy wants to add anything.
Oh, Steve, it's pretty much same old, same old. No bearish case really to be made. I will say this, I mean, the market, it really feels complacent to me, and that it's discounting the fact that, well, it's not discounting the fact that something could happen over in the Middle East, and, it's one of those kind of markets that if something does big happen, I mean, it could get real ugly quick. So I'm talking about a huge, limit down, gap down, yeah. So, I mean, obviously the market over the last, 12 years, you've just been conditioned to buy the dip. So in situations like, in markets like this, I should say, you could have a tendency to get a little bit complacent because obviously geopolitical black swan events can happen. And if they do, it could get ugly. I'm not trying to scare anybody, because if you trade with the fear of a black swan event, you're probably not going to make any money, because it's always out there. And how often do they come around, really? All right, Steve, I'm going to take over the screen, and I'll kind of help Peter here. There's not a lot for me to talk about. I will kind of brush on some of the Holly trades today. First off, Steve and I have both been kind of pounding the table that we like to keep up Holly Neo. Why do we like to keep up Holly Neo? Because Holly Neo was launched, I guess, probably 6 weeks ago or something like that. And
November 5th.
November 5th?
Mm-hmm.
Okay, so a couple of months. And it has been really outperforming the others. So it's looking for stocks that are in play. And how does it do that? It looks for strong relative volume. And of course price movement associated with that. So this has been kind of the one we've been focusing on lately. That doesn't mean there can be some great calls. There was one the other day in Holly, the old Holly Grail, which is now Holly AI in the new dev version I'm using here. So yeah, I mean, you could have them up, keep an eye on them. There's some great trades in there, but for our focus, we're kind of because eventually what's going to happen is we're going to have Holly Grail, and then we're going to have a kind of a swing trading Holly, hopefully here in the first quarter. And then Holly Neo is looking for stocks, like I said, that are on the move. Okay, got volume behind us. There's movement there. So there should be plenty of liquidity. So anyway, that's what I'm going to focus on. I mean, you guys can go take a look at it. You can see here just from the screen, 4 trades in Holly 2.0, basically flat. 2 trades in Holly AI, small losers, it looks like in each. But and really, Holly Neo, only 3 trades today, and ARGD was basically a flat. Okay, getting out for reduced risk and conservative mode. Now, if you held on to this longer, you would have made a little bit, not much. You can see my moderate profit column versus the conservative where it lost 22. And then Hymex pretty much got out for reduced risk, and it looks like it closed right there as well. So kind of a nothing really happening there. But APA was a little bit of a different story. A nice little move in APA. You can see what I'm talking about when you see relative volume here, almost 7. There was the call from Holly, okay, and pretty much trended up all day with a little pullback right there. She got out for a profit save, and you can see if you held on, she got out right here when it started pulling back, broke the fast line. But if you held on to the close, she did finish close to highs. You would have served yourself well by making about another third higher, or I should say, in my case, I'm not going to get into that, but anyway, you've done better. Because I want to move on to help Peter here, because Peter's having a problem with, looks like it's his configuration here. I'm not sure, Peter, if you are, let me pull this box up so I can read your question all the way through here. And let me just pull my B+ window over. Okay, because I did have all my strategies turned on today except for the shorts, and I don't think there were any shorts called today, so I just turned on all the long strategies today. And you can see when I go to my positions blotter, you can see it did trade all the trades today. Now if you counted them up, you would count 9 over here, you'd count 8 over here, and the reason for that is we did have a double trade, 1 symbol traded in each Holly AI and Holly 2.0. So I was able to eliminate that with my configuration, basically telling if I have a trade that exists, do not trade any more trades. Now, Peter, you said you had 29 trades. Let me ask you this first. Do you have any sort of strategies set in your Holly where you're enabling re-entries? Okay, because that would cause an issue. Because it looks like you're saying that you
that
had
box right there where your mouse is.
Okay, no. Okay, yeah, I can't think of any reasons. And let me ask you this: of the 29 trades, were these all Holly trades that you saw, or was it some of your own? I mean, in other words, just some random trades coming through. Okay, none of my own. But in other words, you did not see them in Holly; they were just coming through. A couple of things I would do: I would check to make sure you don't have any strategies that are turned on in the morning, that they're all turned off if you just want to see Holly. And I'm thinking, because really there's 2 ways to connect. Okay, you can see I'm on the paper trader. Okay, simulated trading we call it. You're obviously, I think you've mentioned you're connected to Interactive Brokers, right, through Trader's Workstation. So they should work the same as long as you're connected properly. I don't know why a connection issue would cause more trades, to come out, but so we'll probably, we can't spend a whole lot of time troubleshooting it here. Oh, you're on the paper trading as well. Now that's strange. Yeah, that we'll have to take a look at your configuration. Once you do this, Peter, go like this. Send go to help and click on send files to support, and what it'll do, it'll send all your paper trading configurations and all that, and your trades that came through. It'll send it to us, and then send an right when you do that, send a email to info@trade-ideas.com. explaining that you sent your files to support, and also what your problem is. Like it traded 26 trades, whatever you said it traded today. And we'll take a look at that and see what happened. All right, Steve, I'm going to shoot it back to you.
Okay. Go for it.
It should be coming.
There we go. All right, welcome back. So let's move on to trade of the week. And a couple thoughts here. You know, as mentioned, I've got a copy. You know, as mentioned, for the first time in many weeks, we didn't really see a great set of trades, and didn't see much else either. Kind of noticed the gold spot commodity that we looked at earlier had a nice big pop, but the gold miners, which is expressed here in GDX, had kind of a similar thing, but not too far. And as you can see, let me pull back and get rid of 2 days. I think that might be it there. Let me see. There we go. This is what the chart looked like on Friday. And after a nice big push out of there, it felt only natural that we'd have some sort of a pullback to an area of significance. Well, again, the email teaser this week was, you know, something along the lines of how to know where to adjust your entries, or even your or even trailing stop for that. But in this case, it kind of worked out perfectly. That this week's GDX entry was tricky, and we're going to kind of walk through it here as to, you know, how I handled it and how you might want to handle something like that in the future. I've got 2 blue lines here, which of course represent 2 active, untriggered price alerts. You can see if I zoom in, neither of these alerts, well, they certainly weren't touched as of that day, but when I zoom forward, there we go. They still weren't touched. So the first one down here was basically where the email went out talking about an interesting level. There's the lines I drew in the email, but for the most part, I said you might have to give yourself 10 cents, you know, give or take 10 cents wiggle at your discretion, because this, what we're going to talk about, these pullback entries, which is what this is kind of a, you know, it's ballpark. It's not an exact science. It's not always to the penny, but there's a few cues that we can look for. So the first line that we had was basically the line in the email. And how did I derive this line? Well, there's a couple things. Certainly kind of these 2 levels back here, filling in that gap a little bit for the most part. But you guys know me, I love this moving average. So let me go back again and kind of show you what I saw on Friday. So we had this much space between the moving average and the bottom of that Friday candle. And we know that as the next day's candle would draw, this moving average would probably kind of come up to catch it. And so it just felt like the right level to kind of look at these 2 lows back here and eyeball where we might guesstimate that 10-period moving average to be. Well, what happened? Well, the market opened up the following day. Here's Monday, here's yesterday. Didn't do anything. Oh, but curiously enough, let's zoom in a little bit here. That blue line all of a sudden got updated, and it did in fact touch that 10-period. So it would have been a decent entry if it had came down and touched that area, but we didn't. So here's where we got to start to ask ourselves, 2 days, kind of 3 if you look at it, where the buyers did not allow much of a dip below this level. So this morning, came in and looked at these 2 candles before. Look at that, there's a low there and a low here. Let me highlight these lows here. I bet the price action might just want to drive down right on the open and try and take out those 2 lows. But at the same time, I'd kind of like to see everything kind of come together and touch that rising 10-period moving average. Let's zoom into today. Okay, here's our rising 10-period moving average. Let's move over here to the intraday chart. What I fully expected was the price action to come down here and break into that level and test these 2 recent lows. We didn't get it. Sometimes we don't get it. It's not always an exact science, like I said. But what did we get? Well, with the low that we did put in, which is right here, right on the open, it was kind of a double test, but it's there. That low in itself was enough to, what do you know? Let's look at the low here of the day, 29.02, and the 10-period moving average is at 29.04. What do you know? It tagged the 10-period moving average on the open by a couple pennies. Well, if you've been hanging around me, you know that that's my opinion. It's good enough for that to flip the switch on the algos into buy mode from consolidation mode and try and shake out the weak-handed trader modes. So the lesson here, oh, and by the way, and once I saw it, it came down and tagged that and pushed back up. It's right about here in the day. And, you know, I decided to jump in, and that was when I decided to take the entry based on my discretion. You know, it's the shared account that we all trade here. Andy saw it. But I didn't trade GDX to try and get a little bit more tricky. I traded NUGT, the triple. That's just how I roll. I like the action. A bit more bang for your buck on less shares. So if GDX is up 1% and UGT is going to be up 3%, which is up 3.7% today. So I think the real takeaway here is how can you get into a trade of the week when it never touched the original entry? I don't know if Waleed's here today. Waleed's been pretty good talking to me about how he's been moving and adjusting his trade of the week entry into Tuesday if it doesn't happen to trigger on a Monday. So it was almost like three-pronged. You know, I thought for sure that this second blue line here was going to get tagged. See how I just kind of laid that blue line below this chop here on a 15-minute? I thought for sure that the price action would come down, try and take out those lows, and it would trigger and tip me, hey, pull up GDX, Steve, this might be the buy. We didn't even get that. But thankfully, I was watching it, and what made me decide to jump in and take the entry on the trade of the week at that level was when GDX came down, and I noticed that it actually did, in fact, touch this 10-period moving average. And so that was kind of the moving goalpost, if you will. It's not a goalpost, it was the entry posts. Goalposts are a different thing, but we went from looking at this level to me not being able to send out an email today, but I went and looked at this level, didn't get that level, but it did touch that 10 period. And so what we're trying to do here is give ourselves better entries. Let's look at the bigger picture. What are we trying to do here? We're trying to say, wow, this GDX had a nice breakout of a nice, beautiful saucer bottom, 3 or 4 month saucer bottom. This is textbook. Good bit of volume too. So we missed that jump rope, but the jump rope is going to come back around. As it comes down and ticks, makes that ticking sound on the concrete. That was this morning right there in my world. Why do I like those entries? Because these entries are a heck of a lot better than waiting for these breakout entries. How do you think everybody felt up here that bought that open on the gap up because they got, oh shoot, I've been stalking this thing, but it gapped up. I got to jump into this thing and I got to buy the gap up. Well, I think you'll learn real quickly that that's not always, you know, the most advisable thing to do is jump in on a gap up to go long. Personally, I just think the way the market trades these days, I'd rather wait for it to come back, prod, poke. Didn't quite get a deep enough poke, but it was good enough on the daily chart to tick off that 10-period moving average. So, you know, I took the entry in our account. Maybe some of you guys did, but what's shaping up here? The jump rope is shaping up here for a really nice wedge after a nice push. So if we miss trade 1.0, we let the jump rope set up for trade 2.0, and that's the idea here. And if we can get these types of entries, their line, and as I've been saying before, the moving average forces the action. It forces the hand of the price action. Now, to get a little bit more interesting, you know, with the market down a little bit and some after hours jitters, we're actually up just a skosh, not much, but you can see here on this tag, you know, we're trading right about there after hours. So that is kind of the lesson of the week, how to adjust the entry point, how to adjust the starting blocks, we'll call it that, where to set your starting blocks as the information changes and you don't get the price that you wanted when we're talking about pullback entries. Breakout entries are easy. You just look at the recent high and set it, but I don't think the people that bought that breakout, or I should make it maybe look at more like that, people that bought that breakout there on that gap, you know, they've had a rough couple of days and a rough weekend, and patience can sometimes be a virtue. And I just think I'm speaking bot language better and better as we get more and more experience. Do you want to add something?
Oh, no, Steve, no, I love that. As a matter of fact, I was looking at GDX today as well and tried to grab KL, but I missed it. But anyway, yeah,
Because you saw me jump in and buy.
Well, no, I wanted to do GDX this morning when it went down to that level again where it's been bidding, but I was doing something else, and by the time I pulled it up, it was too late. But
And we weren't even talking about it. We were just kind of
no,
having the same thought. We've
yep.
been doing this so long. We have the same thought.
Well, we always powwow together with the TOW, so we knew it was on the back of our mind, both of our minds.
Yeah. Just to knock that question out, Asia, how do you create an alert for D plus crossing the D minus? I don't think we really have anything for that. If I'm mistaken, Andy will correct me, but we don't.
No, we do not.
I mentioned, I think I was looking back here on the longer term. I had to go to the time frame of weekly to kind of, here we go. 32 level I said might be a level of interest, and that was derived from coming way back here in August 6th, January. Get the jam down, and that's look at jam down by here. We're actually going to look at this. Let's shoot. Let's just segue right into it. We're going to look for some ideas. What's he talking about? We're going to look for some ideas. We talked about adjusting your levels accordingly. Look, let me turn this down. Mute.
Who are you listening to over there?
That's for some reason the IB is still kind of the interactive brokerage British guy telling you that data is connecting and reconnecting.
Oh, I got you. Okay.
So adjusting levels accordingly, look at the moving average, looking at prior lows of yesterday, ticking out yesterday's lows and reversing the moving average is a really sweet way to use for your starting blocks. Okay, so as I said, I don't have any symbols written down here. Let's start on the jam down buy because it's what I was talking about. Look at this. Oh my God, man, that's like, look at this. Do you guys realize how good that is? That arrow is telling me that's the spot to buy, and that was the spot to buy. I didn't buy it, but I got an alert telling me that's the spot to buy. And you look at the daily, why was that the spot to buy? Because this alert looks for daily charts like this that are moving higher, that beautifully pull right back into the pocket and bounce and dance right off that 10 period, just like we're looking for, and then come up and close higher. So I actually like this. I'm going to mark this one up above today's highs, I believe. Yeah, we'll do today's highs. I'll eyeball it there. We'll make this a price alert. Let's look at what else tried to jam down on the open. I like this one too. Not only that, look at this. We had a couple of artificial intelligence holly buys. So look at this. The volume was coming in. The AI was seeing things, and we talked about the jump rope setting up again. Well, here it is. I'm going to use that level right there. A little hitch above yesterday's close. We'll set that as a price alert because that one closed below. See, it closed below the moving average, didn't really bounce out of its way, didn't have a lot of vigor. It's not to say it's not off the board, but I'm not going to waste our time with that one. That's the S&P. We'll stay away from that, and that's also another one. So a couple of right off the bat from the jam down buy, and then we'll go to the A table. And this one was already set. I used this as an example today, so I'm just going to keep that in there, I think. Let's make an adjustment here. Actually, I want to get a head start. I'm going to adjust this down to right above today's high. And the reason I like this one so much is look at that, another AI buy right there. It saw something. So what we're seeing a pattern here is a lot of follow-up secondary setups on stocks the AI recognizes coming into play. And coming into play is not always just a one-day event. What do I like about this? I love the price action being squeezed from underneath by the moving average and a nice flat top here that we've identified there with that. And then, of course, if you won't follow the 8 table, you know that this one is at the top. We got a lot of shorts in here who are going to get really upset if this thing squirts out of this consolidation and continues to short squeeze higher. The higher the short float, the more opportunity we have for a possible short squeeze, and that wants to keep me in the game. All right, next, TDOC. Already had its moving day on Friday for the most part. Let me bring this over here. Well, Ken says, what's the best use of this? If you have access to the AI, follow the Neo, and you can trade with very small size if you want to. And there's only a couple of trades you need to take if you want. I think that's for a newer trader. We're just trying to focus your eyeball where the action is, and that's what Neo is certainly going to do because of the volumes. This is interesting. This is a pharmaceutical, though. I'm going to stay away from pharmaceuticals. Now, why would I stay away from this one? I'm not going to chase this one. This thing probably wants to come right back down, probably wants to tickle the low of that candle right there, and at the same time, just like we were talking about with the GDX, this 10 period will pop in here. So this is premature, but maybe you could set an alert for, I'm not going to do it, but you could set an alert for the low of that candle and try and anticipate that the momentum is stalling out and it needs a day or two, hopefully 2 days of pullback, and then a nice jam down on the open. But that one's not ready. That one's not ready. That one's trying to get away from us, isn't it? It looks like the train's leaving the station on that one almost, but still too many green candles that I don't want to chase. Also, I'm kind of in the same camp with Andy. I feel like, don't chase Tesla there. I feel like this market could be a little tired. I mean, there's no signs of it, but it just feels like it could be a good moment. You know, and I've seen it before, and Andy, I know you've seen it before. The January, the euphoric buying comes in from the 2019 momentum, and then we get to January, we get a good week and a half of buying, and all of a sudden, where'd the buyers go? I've seen it. I've seen it, and I know you're kind of feeling that possibility at the same time. You know, and I know you talked about Apple. There's no reason to think about it, but at the 300 century mark, you know, it's getting a little tired here. What's going to happen? Is the price going to continue to push higher, or are we in for a breather? That's been a pretty good run from.
Well, yeah. I mean, look at it. I mean, it's up 100%, over 100% last year, from below 150 to now 300. Honestly, guys, when maybe it's great scalping and quick hits, but boy, yeah, I'm not looking for a whole lot of longs at these levels.
No. And I'm not seeing a whole lot of longs as I go through here. Anybody who's really good at options out there, and you agree with what Andy's saying, what I think too, shoot, maybe there's a nice, 6-month put out there that's down the road that might be attractive. Who knows? But you got to be smart with those things.
Yeah, you do.
All right. So back to not chasing things. We've only got a few things so far. What's this? And as I go deeper down, see, let me stop on this here. All right. This was one of the Neo calls today, and this is what I didn't like. And I told Andy in real time, I don't like this. All right. Now, it doesn't mean that I'm wrong, but a buy tag right here, the moving average that I like to buy off of down here, that's a whole lot of void that I don't really want to trust. Okay. So that's what I see when I pull those charts up. All right. That's why I won't chase charts that look like this. I'd rather for them to set up on that moving average where I think the rest of the herd is sitting in wait. So it's funny that was on there. Just go down through a few more here and see if there's anything in there. Any other scan you think we might want to look at today here?
Oh boy.
Go back to the 50 maybe. You think there's anything useful in there?
Yeah, I could take a look at mine real quick and see.
This thing can't get it up. This thing's nice and skinny.
Old stocks in that.
Yeah, you liked KL earlier. Just a matter of how do they look. Mine's been consolidated.
What'd you say? KL.
KL. Didn't you like KL?
Oh, I did, because just missed it.
Well, let's put an alert above today's high.
Yeah.
We'll do that right there. You usually buy on the pullback to the 10 SMA, or do you wait for buyers to step in? A little of both, Randy. I mean, it all kind of lines up. I've gotten tired of breakouts that fail. And I've just noticed over the last year, especially over the last year, that the first half an hour of the day is where all the nastiness comes in. And if you think about it, it makes sense. These algorithms are paying for their order flow. You got people coming home from a regular job, and they're logging in their E-Trade, drinking their beer, watching the game, Oh, geez, look at this stock XY. If this thing goes any lower, I'm out. It's the obvious level. If it breaks this obvious level that I read in the book, everybody told me to sell, I'm out. And well, those start to line up like a bunch of bowling pins on a Brunswick lane. And these algorithms see that. And that pent up good till canceled, stop, open, stop, mark, get me out order, those all line up like bowling pins on the open. And I'm seeing this, and kind of trying to translate it and decode it. And I think that's what's happening. You get a lot of head fakes and a lot of attempt to shake traders out of good looking trending charts on the daily. But for some reason today, it's just a nasty run on the open. And that nasty run on the open sometimes is the spot to think about getting in. And it's been working well for me. 10 SMA. I don't do the EMA. I like to keep it simple. So yeah, there's that one. We'll pop that gold chart in there, the gold stock. Let's see if there's anything else that looks interesting that you just can't pass up.
I'm looking through some of mine.
Here's one that kind of pulled back and bounced off the 10. Actually didn't even touch today. I'm going to stay away from it. I'm getting kind of weird where I have to be almost like OCD. They literally have to touch. And the reason I say that is because algorithms, they don't work in gray areas. It's if, and, then, target, achieved, reverse. So sometimes they literally have to touch. And I've been getting a bit more OCD on that myself. If the price didn't touch the moving average, then I feel like a pitcher with some superstition. I'm gonna pass on that one. All right, I think we got a few locked in here, unless Andy has any more he wants to add.
No,
price alerts. Let's decipher.
I don't see.
Okay, so we'll keep those out of it, kick those out of there, delete those too. And GDX, that's an old one. MTCH is the one that we want to keep, so we'll keep that one. All right, so we got a list of 5 or so. What I usually do is just share these out using our copy all cloud link. And let me drop these out. Price alerts, I'll call them, and paste. Well, we've got a couple minutes. If anybody has any questions, you can try and shoot them our way. We can look at a chart or two if you've got one that you're looking at. Yeah, John, it's the jam down. I can certainly share that. And again, the idea being is, catch these nasty drawdowns on the open on interesting looking daily charts. I like that INFN. It took a little while longer on this one. It was a midday drawdown, but that was the spot. So yes, I can share this as well. I'll label that in the chat window, and then it's in there for anybody that wants it. Got it. All right. Any other questions before we bring Scott in? Yeah, the pullback strategy, Randy's asking, does it work on most time frames? I think the only time frames I like to focus on are the 15-minute, and I like to focus on the daily, obviously. Now, the 15-minute, look at this. Here's an example. Even though I didn't like that buy tag, and I just totally crapped all over it, look at what happened. It pulled back, and look at what forced the issue higher. If somebody was watching this thing and said, I don't like it up there, but look at this thing. You could have had an interesting buy at 51.10 and taken a point out of that. So yes, the 10-period SMA works like a beauty charm for me on a 15-minute, and it also works like a charm along with the others on a daily. So that's the way I like to do it. On the graph showing Holly outperforming the S&P, which Holly is that? I think with that amount of data, Brian, going all the way back to beginning, it's going to be the Holly AI. And I can tell you if and when we start to segment and pull out the graph, I think actually, I don't know which one you're referring to, but Jamie in yesterday's webinar actually went into our back office and grabbed some data and showed people that the NEO really is kicking butt. But the one that we use and publish on our blog, that's the conservative of all conservative, the very first one, the Holly AI, not the others combined. Great. All right. AG, all right, Hal wants to look at AG. That's a gold mine. That's a silver mining company. I'm very bullish silver. Look at what Pause has been doing. You cannot kill this thing. Look at that buy tag back here. I mean, this one has been the gold standard of the silver trades. Pause, but AG, I think I'm liking all silver right now. Let's look at the commodity in general. It's doing the same thing gold did. Having a really nice move. So it's going to beg the question, what is SLV? What's the silver commodity going to do as this thing continues to come up? Remember last week we had fun? Let's do it one more time. Let's modify the 10 period to the turbo period, the 5 period. I bet you it's riding that thing perfectly.
It looks like it is.
Oh my
Yep.
God.
You may have to draw one of those.
I have to what?
You may have to keep one up there all the time.
I have to keep one of those on my screen. If you guys were here 2 weeks ago when we did the Trade of the Week webinar, we talked about the 10 period. Yeah, I love the 10 period. I talk about it all the time. But sometimes, like silver and gold, they don't even pull back to the 10. It's literally repelled by even the thought of it coming up the street at it. So it keeps moving higher. And I thought, well, what if we split that one in half? You know, we got the 20 period and we split that in half to the 10. What if we split the 10 in half to the 5? Oh my God, you wouldn't believe how many stocks, strong, super strong charts it lined up with a nice push. And that, I think, the biggest examples right there on that day. Very interesting. Yeah, I might have to do that. Let's see what gold looks like on there. Gold is above the turbo, actually. Wow, you can't even stop gold. That's how strong it is. Interesting. All right, I'll put my parameters back to where they were, but I don't like too much stuff on there. I can just go back and forth if I need to eyeball it. But you know what? Let's talk about that for a second. Let's say I was, really bullish gold, but I didn't want to buy it here. And we talked about everything that we were talking about earlier, eyeballing. Where's that level for the right level of pullback? We may have just added here a new interesting area. There's my 5 guy. Maybe I create a price alert and, put that price alert roughly right there and try and time this turbo thing that's been holding it up. But getting ahead of myself here. All right, quick check of the questions. Is that just on the daily? I think you can do both, KJ. KJ's asking, is that 5 period turbo? It's going to work on both. The 10 period works on both for me, so there's no reason to think that stocks in turbo mode wouldn't work great with a 5 SMA on the 15-minute chart as well. All right. Is it possible to make a scan that will alert when the price is near the 50 SMA on a 15-minute chart? Sure. All you want to do is, here's what I would do, is I would do 2 things. I would make your alert a new 5-minute low, so it's a new intraday low. 5-minute low is going to be your event, and then what you're going to want to do is you're only going to want to see that when it's close to the 50 SMA. And by doing that, you'll take the 50 SMA filter, and you're going to want to kind of bracket it. So, plus or minus, give it a little bit, negative 0.05% and plus 0.5%. So you got yourself a 1/10% wiggle here, 0 being the actual 50-day. Oops, excuse me. Let me go back. We're doing 50-day. Do we have a 50 period on the, I don't know if we have the 50 period on the intraday, do we? Because we have the 20.
Yes, we don't?
No, look, we have the 20. We have the 20 period on the 15.
Yes, that's what it is. It's the 20.
So that's how you would do it if we had that filter, but 0 will equal the actual moving average itself. So when will the news tab be on, Vladimir, the next alert, I'm sorry, the next
version.
The next version, thank you, Andy, that's coming out, the next beta version that's coming out available to the public will have the tab. And what he's talking about, I don't have it yet. I'm a bad employee, but we'll have a 3rd tab here that says news. And we're pulling news as I understand from the Google News feed. So that's where that news is coming from. We're pulling it into Trade Ideas. All right. All right, I guess that's it. Let's go ahead and bring in Scott for any last minute announcements. And remember, we're not going to have the webinar available next week live. We're going to be doing our annual meeting. So that's all for the, something just popped. Is that gold just popping again?
Well, yeah, because the market's still selling off.
Yeah, it just popped right back up. What does that mean for our GDX? That's strong. All right, Scott, if you're there, come on in and walk us out. You might be on soft mute or hard mute. I mean, Scott.
Hello. There we go.
There we go. You're good.
Yeah, it switched sources on me. USB was not cooperating. So I want to make sure everyone's got copies of the setup ebooks. There's 3 books with a couple chapters each, including cloud links to add to your layouts.
I think it stopped cooperating again, Scott. No, we still can't hear you.
Hello.
Bummer.
Hello. All right. Well, you'll just have to close it out without me.
Well, there we go. Give it a try.
All right. Yeah, my USB.
Yeah, I hear you. Give it a try. If you stop talking, I'll close it out.
USB drivers aren't cooperating. So anyone that doesn't have a copy of these books yet, go get them. Trade-ideas.com/setup. As a podcast, we haven't debuted this season yet, but when we do, you should be ready. And just search for Trade Ideas Podcast wherever you listen to your podcasts, and you'll be good to go. The new episodes. There's a new code. New TOW, all caps. Not sure if you're hearing me. Just go ahead and use that to save 15% off your first month or year of Trade Ideas, also usable for an upgrade from standard to premium. If you have any questions, email us info@trade-ideas.com. You can follow Steve on Twitter at TodayTrader, also follow at Trade Ideas, at QuantBot, and follow us on Facebook at facebook.com/TradeIdeasPro. Thanks all. Thanks, Steve. Thanks, Andy.
Sounds good. I think they got the gist. All right. See you guys. Bye-bye.
Thanks for